Well, joining me in studio now is Mr. Avi Khalib. He is the president of ehomes.com. Avi, welcome to the program.
Thank you, Don.
Now, this has been kind of a watershed moment this week because we heard from the Federal Reserve that they're not going to taper off. They're going to continue to buy $85 billion per month in bonds and other purchasable assets. First question to me is, because of course you're very involved in the real estate business, that's probably going to hold down mortgage rates further for the foreseeable future, wouldn't you say?
Yes, I think it will keep the interest rate very historically low, and this will give the opportunity to the buyers to step in and start taking advantage of the market or the rates that are afforded now.
Well, now, you and I had a conversation before going on the air where you were saying that you have seen a remarkable turnaround in the real estate industry. Prices are starting to escalate once again. It's not the boom, perhaps, that we saw in 2003, 2004 or so, but you said it's getting close.
Yes, we are actually, ever since the beginning of the year, we had seen a tremendous increase. I think in Orange County, it's over 25% increase. We almost, in some places, are back to the level pre the recession. And we had a very low inventory that was observed with the 20 to 30 offers on each property in a matter of a day on the market.
Really, 20 or 30 offers.
Yeah.
Now, it was obviously during the depths of the recession, you know, when it really hit it hit the fan, so to speak, in 2008. We saw neighborhoods where the home values plummeted because somebody was foreclosed upon, went into a short sale, maybe a home that was selling for $750,000, short sold for $500,000. That brought everybody's value down on a comparative market analysis. That is all changing now. That is going back in the other direction?
Yes, it is. And we are seeing some of the sellers are aggressive that listing their homes above the last sale because of initially the short supply and high demand. And as you know, the market is supply demand.
Of course.
That's how the prices move forward or backward.
How about an appraisal situation? Because we know that as far as getting a home approved for a mortgage, you've got to be subject to the appraisal coming in at the right number. Have you noticed in what you're doing that the appraisers are on board with all of this as well?
Well, that's where always the element that these appraisals are always behind the eighth ball. However, most of the buyers that we see that are buying, they are coming with a substantial amount of cash down payment. We see, I say, 25 to 30%, over 50% down, and about 10 to 15% are cash offers. And that's what's driving the market, because the cash offer doesn't need the appraisal or the banking financing.
So is it still the investor that is pushing the market? Because I know that really kind of stabilized the market in the last year or so. Investors were coming in and they were snapping up foreclosed homes and distressed homes. Is that still the case, or is this going back to your traditional homeowners?
Up to about 2 months ago, it was the case where investors snapped almost every property that was on the market. However, in the past 2 months, that's changed. And some of the investors, as well as foreign buyers, had stepped out and were looking for a market that's still somewhat soft outside, especially Southern California. And more buyers. So now the dynamic have shifted, where we have more inventory and the buyers are kind of somewhat skeptic about entering the market. And inventory had increased tremendously. Just simple case in point, in Orange County, in some of the areas, the inventory had raised almost 300% from 2 months ago.
That's incredible. Now, people that are looking for homes right now, I mean, let's face it, home prices are still lower than they were a few years ago. Interest rates, as you mentioned, are at historic lows. I mean, this can't go on forever. I mean, something is going to change. Either the prices of the homes, as you said, are starting to go up.
Yeah.
At some point in time, the interest rates, they have to go up. I mean, you're in the real estate business. Have you ever seen a better time to be looking than right now?
In terms of interest rate, it's the lowest ever. Even back during the Depression, it wasn't as low as you can get, close to 4%. And most of the purchases right now, people are driven because just simple math. If an interest rate between on $500,000, if it's at 3% and going up to 4%, that's increased the payment almost $300. So a lot of buyers are looking at that, and even though the price of the home might be $10,000 higher, they are looking at the long term because they want to afford the monthly on it. More important, not only that, an increase of 1% in interest rate, it will put some people out of the market because of their income. So this is the great time for them to buy.
Once again, the company is ehomes.com. Visit them at ehomes.com. We've been talking with their president, Avi Khalib. Avi, fascinating perspective on the real estate market. Thanks for joining us.
Thank you very much, Dan.